I'm Ryan Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. Copper is on a tear. The metal just broke all-time highs, and the signal for investors is clear. Global supply is tightening fast. Prices pushed past $11,000 per tonne on the London Metal Exchange, while US COMEX futures jumped as much as 1.6%, hitting their highest level since late July. The move follows a major copper conference in Shanghai, where the message was unmistakable. Unplanned mine disruptions over the past year have squeezed supply, and the market is nowhere close to prepared. Investors have been bullish all year, thanks to copper's central role in electrification, EVs, renewable energy, grid upgrades, and data centers. The metal is now up nearly 30% year to date on the LME, and UBS expects global demand to grow 2.8% in both 2025 and 2026, powered by the same themes driving the energy transition. This isn't a speculative spike, it's a market catching up to a structural reality. The world needs more copper than the current system can deliver. What do you think? Are we still early in the cycle, or is copper due for a breather? Algoma Steel, ASTL on the TSX, is making major waves, and not in the way the market hoped. The company is laying off more than 1,000 workers, over a third of its entire workforce, as it accelerates a huge operational shift. Why now? The heavy 50% US tariffs on steel have effectively shut Algoma out of the American market. The company posted nearly $500 million in losses last quarter. That pressure forced it to speed up its transition to electric arc furnace technology by about a year. That means shutting down older blast furnace and coke oven operations sooner than planned. The change will eventually make Algoma more efficient, but the timing is painful, especially for Sault Ste. Marie, a community of just 72,000 people. Governments are stepping in. Ottawa and Ontario have put forward $500 million in financing, along with new Buy Canadian policies and tighter quotas on foreign steel. The goal? Keep Canada's steel industry competitive as global oversupply challenges continue. Algoma's move highlights a bigger question for investors. How quickly can traditional steelmakers adapt when trade shocks hit? Is this the start of a leaner, more resilient industry, or a warning sign of tougher days ahead? Barrick Mining, ABX on the TSX, is making a bold move that could reshape the gold mining landscape. The company is exploring an IPO of a minority stake in its North American mines after years of weak stock performance and pressure from shareholders. Barrick has long traded at a discount to peers because of its heavy exposure to higher risk regions in Africa, the Middle East, and Papua New Guinea. A partial spinout would highlight its stable North American assets, including major operations in Nevada and the Dominican Republic. But the reaction has been mixed. Activist hedge fund Elliott Management recently bought a $1 billion stake and pushed for a full breakup, not just a small spinout. Some industry leaders argue that selling only a minority slice could create an orphan company that still trades at a discount. Even so, a separate North American unit could set the stage for something bigger, including a major merger with Newmont. The two are already partners in Nevada gold mines. Leadership turmoil is adding fuel to the debate with recent executive departures and questions about long-term direction. For investors, the key question is simple. Does a partial spinout unlock value, or does Barrick need a full split to catch up with its peers? That wraps up our weekly insights. From Algoma's massive layoffs to Barrick's big strategic shakeup, to copper smashing records as supply gets squeezed. If you want more fast, clear insights on the stories moving markets, make sure to hit subscribe and stay tuned. I'm Ryan Iverson, and we'll see you next week.